May profits be upon you. Hey, I already did it, put out a video on gold, but I might have confused you with the ending to that video. So I'm going to do this video over and I want to make sure it's clear. All right. I'm very aware of the news that's coming up, especially for the US dollar. All right. It's coming up on July 7th and July 28th. That'd be Wednesday and Thursday. That is the FOMC, the interest rate decision. And on the following day, we'll have GDP numbers. We get lower than expected numbers again for a second quarter in a row. It would indicate a technical recession for the US dollar, for the US economy. All right. So these are going to be potentially market reversing kind of numbers. You understand? Last week, we saw the US dollar retrace. All right. Didn't mean it's a short-term retracement. You know, if we just take a quick peek at the Dixie, or the US dollar index, you can see how this retracement started after this very, very bullish. I mean, it is hardcore bullish. All right. There is no mistaking why the US dollar ranks on the RT money meter at the top for a few months now. All right. But because it went from 9.41 last week to 6.89 this week, doesn't mean it's reversing. All right. We've hit the top and all of that. No, that doesn't mean that. It just means after every impulsive move, there comes a corrective move. All right. That's all. All right. And we may see price head down to this zone here, this zone of demand. And as you can see, if you look over here at 105,632, that would be around the number that we should be looking for. There's a fair value gap, an imbalance that could be filled here. All right, before price decides to head back up. All right, and what we could see this happen between now, Sunday open and Wednesday news, the FOMC. Okay, and or if it doesn't, if that's not high impact, because we're expecting those the interest rate to be hiked maybe 75 percentage points. All right, if that doesn't move the market up, the GDP numbers, if they come in lower than expected, you can expect a flight to safety. All right, and USD being a safe haven currency. All right, so that's what the play is. As this moves down, gold will move up, and as it reverses and resumes the overall bullish trend, gold will come down. Keep that in mind. Now we're going to go to the gold chart. I said the gold trade, the gold chart, right? Got the news. We have this COT report. You might not be able to see these numbers. I can't make them bigger. All right. Yeah, I can actually make them bigger. All right. The numbers say that the big banks, the big boys, they are 62% long, right? That's what they've been for a minute. All right, 62% long. Not a whole lot of majority, but enough majority are long on the in gold. However, they have closed 10,122 trades. They have closed those long trades, 10,000 of them. What did they also do? They opened up shorts, big time, 13,044. They are putting their money on shorts. All right. I mentioned that in the other video, but I want to re-emphasize that. The big banks are looking for shorts. All right. They've taken profit already on their longs. Now, this red arrow means that the higher time frames are bearish. If we just take a quick peek, I'm yelling because I want to make sure the point is driven home. Look at these. This is weeks. Each candle is a week. We impulse to the low, we pull back, and then we're again pushing bearishly. All right, and this is just an easy to see downtrend, right? The momentum is down. On the daily, we can see the break of structure here. All right, a bearish break of structure means what? That we are bearish. All right, we broke down and we are trading below this pivotal point of structure. From here, we made a big high. Once we take that low out, we are bearish. Yes, okay. Now let's go to the 4 hour. Now, what I've noted is this V-shaped recovery. When you see price come into a zone of demand here, and this is the extreme. This is the extreme of a weekly and daily demand. All right, this is the extreme of it, and we tapped it, and we formed this V-shaped recovery here. You just got to know that this is going to be a bullish move, a very bullish move, and we'll have some carryover. All right, we broke structure here. All right, this low, and then with this impulsive low here, and then this descending correction. All right, we made this low point here, we pulled up and then down. This is a very nice impulsive move. We moved a bit sideways here after making this low, and then we took that low out. All right, this is very bearish. All right, now what do we have here? We have some recovery. All right, and we broke this area where this structural point here, where I consider this pullback to be structure, actual 4 hour structure. All right, and we made a higher high. All right, we have a demand zone here that price is coming back to test. I'm pretty sure price will come back and test this. It is a little shy here. All right, we may open up bearish, come down, sweep that low, then bounce up, and we may go higher to sweep this liquidity. But all of this is going to happen Sunday, Monday, Tuesday. We may break this high to sweep liquidity, but will we break this high? I don't know, because come Wednesday, I believe, once the news comes out for FOMC and the interest rates are hiked, and then Thursday GDP numbers come in bad, I believe we're going to be seeing something like this here, and we're going to be heading down. I hope this is clear. This is like, a buy to sell kind of situation. All right, I want you to be careful with this. I'm going to wait for gold. All right, we could very well come up and test this zone of supply up here. I have it lightly drawn in here. If price makes it up to here, that it would make such a delicious trade. I'm not counting on it though. This is what I'll be looking for. All right, you know what I look for. Every time I look for the same thing. Every time I look for the same pattern. A push up, a pullback, a break of the pullback low, and a return to impulse. All right, I'm looking for this. But if it doesn't get up that high, that's fine, because there's liquidity points here, and we have news. All right, some people are going to look at this here as a double top. All right, and they may want to take shorts here. All right, only to have price come back up and smash them out. We could use two or 3 days to get up here, and that would be a beautiful situation for me. But I believe we're going to take that low out, and I do believe price will make it down to the next stop on this train. All right, what is the next stop on this train? The first stop is going to be a deeper mitigation of this weekly, daily zone of demand. I believe we're at the very least, we're going to take this low here and hit the midpoint of this zone of demand. All right, but where do I think we'll end up? I will tell you. Let me look at the daily. All right. See how many times we hit this. 1, 2, 3. We should have expected this pop here, but I don't think this pop is going to be like this one was. Look how high it went, ended up going. All right. I think because we've tapped this zone so many times, because there's so much liquidity down here. You know, come on, man. Liquidity here, liquidity there, liquidity everywhere. All right, I think we're coming down here to the next stop, to the next zone of demand. This one, this could be it here. I'm going to look at this. Let me see. Where is this at? 1663. Yeah. Yeah. I like that. I like this zone as a target. Let me put that as a target. Put that as a target for the week that is coming. Yeah. So that's it. That's my analysis. All right. Do we understand? You want to take that buy? You go right ahead. It's a little aggressive for me. And if I see something clear, you know, if I see something clearly on, and it has to be early in the week, but if I see something very clear where it presents itself a buy situation, it would be this from here. The sweep, you understand, the sweep of the low, a tap of this demand zone in respect of the low of this demand zone, and we get that pattern, then I will take it up from here. I will. All right. It's aggressive. I'm telling you right now, that's aggressive. All right. Because the money shot is the shorts. I'm looking for shorts in the gold, I'm looking for shorts. All right. This is a bearish market and I want to be pro trend. All right. The banks are banking on shorts too. So we want to follow the footsteps of the big boys. That's what smart money does. All right. I'm not smart money. They are. I'm following the footsteps left behind by smart money. All right. And that would be supply and demand zones. All right. Now, if price should break this zone, fill this imbalance and take it on down here, I'm expecting a reaction once it hits this demand zone. All right. But will that demand bring it all the way up here? I don't know. But if I see that pattern, I would like to take it higher. But this has to happen early because I don't want buys. I don't want buys. I'm looking for sells, but I'll take the buy. All right. And I will take it. I will take it very carefully, small position, and manage the trade aggressively because I'm waiting for the news. All right. If you do nothing, that would be smart. If you do nothing, but wait for the proper high probability short, then you are going to be the smarter trader. You will be smart money. All right. I can be a little aggressive sometimes. I'm not saying I'm going to take this trade. I'm not saying I'm going to take this trade. I'm saying I will consider it depending on how it sets up. All right. If it's clean, and it's like Monday or Tuesday, and there's room for price to go, I'll strongly consider it, but it will be aggressive. Do you understand? I hope you do. If you like this video, smash the like button, subscribe to my channel and catch my updates, and do leave a comment. I want to make sure I was clear with this video. Leave me a comment. Let me know the clarity hit you in the face. All right. I will see you in the next video. Thank you for watching.